Hello guys, I'm Miracle from Trading Pro. I want to show you how to find market direction using swing analysis and highs and lows of the day. So let's look at okay, we can go with this. So let's start from, let me zoom in. I told us in earlier videos that if you engage the chart, first thing you need to do is to look for direction before you talk about entry and exit. So let's look at this market downtrend. Okay, so you need to understand trends. We have the uptrend and the downtrend. So what are uptrends? Uptrends are higher highs and higher lows. So when the market shows the characteristics like this, you know it's in an uptrend. And when the market shows the characteristics like this I want to draw, you know it's in a downtrend. So this swing analysis, I want to see, and of course, if you understand this, then you'll be able to understand order flow. Okay, of course, you need to know the order flow before you apply any strategy. Every strategy that has to do with entries, imbalance, order blocks, and all that. When you start talking about smart money concepts, ICTs, is actually under the market structure. Like your success trading it depends on how well you understand order flow, how well you understand highs and lows of the market. So first of all, you need to define the trend so you don't go against the trend. Trend is your friend. So first of all, the market will create a low. Firstly, the market is going to create a low and a high, and how is this low and high when I see this? So I always tell people 1, 2, 3 is what confirms the trend. Of course, they'll call it 0, 1, because of course this is the first swing. 2, 3. So this first one is 0. So if the market starts from 0 point, creates the first swing, second swing, third swing, fourth swing, fifth swing, sixth, seventh, and so on and so forth. From 0, first swing, second swing, third, fourth, fifth, and so you need 3 swings to define the trend. So once the third swing breaks the high of the first swing, then it's uptrend. Once the third swing breaks the low once the third swing breaks the low of the first swing, then it's downtrend. And as far as the low keeps breaking, all these are supports or lows or trough. 1 is high, 1 is high, 3 is high, this is 4, this is 5, and this is 6. Sorry, that's 7. This is 6, and this is 7. So 1, 3, 6, 1, 3, 5 rather, 7, 1, 3, odd numbers, 1, 3, 5, 7 are all highs. So if the market moves down and does not break 7, then uptrend has kind of ended, and we're going to see that. And of course, this is 3, 4, 5, 6, 7. If the market moves up and comes here on this point and do not take out this point, it means that this is of course confirmation of uptrend in most cases. What I just did now is confirmation of uptrend. If you look at it, it looks like this. Let me change this color. Where's the color? Where's color? Okay, just a moment. If you see here, this is 1. Remember, we said it starts from 0, 2, 3. Remember what I said here? 1, 2, 3. Remember what I said earlier? So 1 has been broken, so that's characteristics of uptrend. Though we have seen cases in the market whereby price ends up, breaks down, and keeps going downward. This happens, but in most of the cases, let's say 70% of the times, what we are going to have would be this, this, and so on and so forth. So having said that, let's go switch. Let's go quickly into the chart. I just want to do that brief illustration. Okay, we just want to keep it simple in all our sessions, so you don't even get confused. Okay, so I don't want to know what has happened earlier on this chart, but I'll just show you the little I can see here. So now this is swing low, swing high, swing low, swing high, and then we had a sweep here. Okay, some could actually still call it a stop hunt. Let me get something. I need a rectangle when we're analyzing. So there's no rectangle here, so we can add this. And then in the other class, I showed you how to add indicators. So this is it, rectangle. Either I double click or I just click and click inside. So either of it. So I need my rectangle here. You can see this, the initial low. Let me change the properties of this rectangle. All right, click. So if you are new to Forex, I believe you are learning this. Draw as background. Just select this. Okay. No. Fill. Parameter fill. You need to add fill. Okay. So you can see the market came down. So some would call this stop hunt. You know, there were others here. This is the sell side liquidity. So it has to be taken, has to be grabbed. All right. The market did what it normally has to do. Now see what happened. Remember, this is a high here. Let me write it. So okay, in this case, let me say these are 0. I don't know where it's coming from, so I don't want to look there. So this is 1, this is 2, this is 3. Now this is 4, 5. The fifth swing is just a sweep, you know, of 3. So they are supposed to be the same zone, but the market needed to take out the sell side liquidity. So, and of course, this one of the confirmations you need if you want to trade well. If you see this kind of thing, then enter the market probably here, like when this confirmation came. If not, again, there are other ways, like here you could have entered the market. So, but we are not talking about entries yet. We are just focusing on direction. So you can see high, because it took out, it broke. This is 4 is a resistance, 2 is a resistance, 1 is support, 3 is support. So support is a zone where we buy, resistance is a zone where we sell. Resistance is also called supply, while support is also called demand zone. And they are all zone, not line. It's wrong if you come and just draw it with this. Let me show you. If you just come draw it with this line and say it's 0.664. No. You see, that's why I brought this rectangle. So try to map out the zone. And of course, in subsequent classes, I'll show us what I look at or how I map my zone. Okay, so let me take away this rectangle. So 4 as a resistance, once the market breaks a high, you know, you see that we call it high, resistance, supply. So once the market breaks a high, it begins to give us an insight that price would actually start buying. Now, of course, after this stop hunt, they remove this high. Then we had a retracement. Okay, between 1 and 2 is a retracement. 0 to 1 is main swing. 2 to 3 is main swing or impulse leg. Take note of these terms. Okay, 3 to 4 is retracement or pullback. So now this market did a retracement, came back to this market station. All this we are going to learn. Okay, I told us initially we need point 1, 2, and 3 to confirm our trend. So this is 0, the new trend, 1, because 4 was taken out. If we don't have this, then we can't do this. So because 4 was taken out, it became high. I said market starts with low and high, or high and low. Just like this. Okay, I get it. So 1, 2, 3, confirmed. So at this point, we can start buying. Okay, so 3 to 4, of course, this 4 is retracement or pullback. That's what I've called it. Where is my arrow? Just a moment. Okay, so retracement, then high. See it. So these are swings. This is how we trade. So you need to look for the swings, and an impulse leg is that swing, and a main swing or impulse leg. The main swing is that swing that breaks a previous high. So we either call it higher high or lower low, higher high or lower low. Okay, in this case, let me still label it. Okay. Sorry, just a moment. Okay, I know from where this is coming, I can actually call, but okay, let me just use this case. This is high, this is low, this is lower high, this is lower low. So once you see HH, this is high, this is low, because the market is turning. This is higher low. There's difference between LH and HL. Lower high, higher low. Okay, so 3 is higher high. So that means that swing 3 is a main swing. Swing 4, between these 3 to 4, is higher low. It's not a main swing. It's a dominant swing, or you call it retracement or pullback. Okay, so 4, 5 is higher high, HH, main swing. So in as much as you see the main swing, if the main swing is bullish, stay bullish. So how do we define the trend? Once the main swing is bullish, meaning it broke a previous level like this, stay bullish. Okay, 6 is higher low. Now 7 is higher high. We are still going to stay bullish. Now, but take note of this. What happened now in 7? So 7 we had swing 8. Now see what swing 9 did. The same thing that happened in swing 5 when the market was coming down is what happened there. We had a sweep. There. Okay, so remember this was resistance. We said if it breaks it, it didn't break it. It only grabbed, this. We have the buy side liquidity. There's money here. Whenever we say liquidity, we say money. There are stop losses, buy stops. There are orders here. So the market had to trigger those orders, and then of course the dealers will have to they buy in order to sell, they sell in order to buy. Okay, let me clean that as I drew it up. Now they buy in order to sell, and see what happens. Let me also clean that. So it's kind of inducement. So they induce traders to take positions to buy, then they will start selling. They induce traders to take position to sell, and they start buying. There are lots of things to do, so we are not going into that yet. So the idea is that you need to look for, ensure you see higher high. Ensure you see this before you plan to buy, then look for entry. Ensure you see this before you plan to buy, look for entry. Ensure you see this, then you plan to buy, look for entry. Ensure you see this, then plan to buy, look for entry. Ensure you see this, then plan to sell, look for entry. Ensure you see this, plan to sell, look for entry. Ensure you see this, plan to sell, look for entry. I don't know if you get it. So let's have new low before you keep selling. If you don't have a new low, for instance, the market keeps doing this. This is what we call ranging. For me, stay out of the market. Or you buy on this low, you sell on this high, but you could actually be trapped somewhere. So just allow this market to break out, either to the upside or break out to the downside. Okay, I've said quite a number of things. You can watch the video twice in order to understand it better. Put this into consideration when you are taking your trades. Put it into consideration when you are taking your trades, okay? I need to do, okay, so let's look at the new side. So the market came, of course, this kind of double top for people trading patterns, but we're not mentioning a lot of things. Neckline. So of course, the most important thing is that, wait. Let me draw it so it makes sense. Let me take the red. Let me pick the red color again. So of course, this is still within. So for me, I'll call this. Of course, seeing this, you can start planning to sell from this point. Swings. So what next? Now at this point we have a lower. So this is actually where we'll look at this market. I need to clean up all of this. Let me clear the chart. Okay, so see, you now use your tool. Now we want to look into the future. We have high here, the market retested it, and then we have the low here. So if, of course, we should sell at this point, let me mark that. We should sell at this point because of this. All right, so let's see what did the market do. So I'll gradually open it up. You see, sold. Now it's sold. We're going to, don't chase price. Write this down somewhere. Don't chase price. We can't start selling where this market is. The market, we can't start selling there. So let's gradually push it to see when it gives us an entry. We're going to talk about different entry methods. We're going to talk about different entry methods. Okay, now this is kind of a good place to sell. There are things I'm not mentioning now. So you can find entry somewhere here. So let's see if the market, what happened. Okay, of course our stop loss will be around here. This price also where I just marked is it's also another place that we can sell. Now see what happened. Of course, this market took a sell here and came down. Then patterns can be validated. Now it broke this high. I think I didn't even take note of that. It broke this high, so we're not even supposed to sell. Do you get? It broke this high, so we weren't supposed to sell. But notice, because you sold here, the market is going to forgive you to do this. I think get some profit, gave you time to re-strategize and understand the market. Now here again, if we are sold, I believe the market is also going to give you more time to re-strategize. You see, now the issue is what? The market turned bullish. You can see, turned bullish. So at this point, you need to keep looking for buy position. However, you also need to mark some positions because the market would always respect those positions. Look at it, those levels. You see, when they were moving up, you see when they got here, they respected this. When they came here, that's this. Look at, they respected this. And when the market came to this level, that's it. Okay, so you need to keep identifying the positions. By eventually you are buying, you need to take note of what's happened in the past from your left. Okay, you see where I marked? You see how they respected it. Now, of course, if we go check the history, you'll notice this place, this resistance, this was the previous resistance where the market just paid attention to. Okay, because of time, let me just go ahead. So that's how you get your trade with swings. With swings, this really took time. I will show you. You know, with swings, you just need to identify the swings. You need to identify the swings. So once they break the low, plan for a sell. Once they break the low, plan for a sell. Once they break the high, plan for a buy. This market created a pattern and then it validated the pattern. So if you had bought here, probably before you saw this candle, maybe you had your order here and then it invalidated. It's not your fault. Look at this. They broke the high. They broke the high to this point X. If you had bought, you will make money. Look at this particular one. They broke it here at this point Y, and the market retraced. So if you had bought, you would have made money. So you are not going to win all the trades. That's the idea. Okay, so let's watch. Now this is a level. Let's see. Once you get broken, we'll start buying. It got broken, you see, it starts buying. And it will keep buying. Now this is the low. Let's see. Once it get broken, you see. So that's how the market goes. Inducements. Okay. Now this price level got broken and the market. So you need to know how to watch your swings. Now, for instance, it will be wrong when you meet price here and you want to buy. Just wait for a pullback and look for an entry somewhere here. Now, in subsequent videos, this is already long. When we start talking about entries, I would show us how to pick entries with swings and all that. So you can see, you can see, you can see, you can see. Let's see this. Let's see what happened here. Let me clear this. Okay, once it takes this out, then it keeps selling. Remember the word inducement. Inducement here. And then let's see this high. If this high is taken out like it is, the market keeps buying. He bought, you know, created imbalance, then came back, because price needs to be efficient always. Then broke this high, created a new high, broke this high. So that's how price will move. Look at, broke this low. So just know how to read, or how to know when the structure is broken. When a low is broken, keep selling. When a high is broken, keep buying. Now, all this, there are things I'm not mentioning, like something like this. You know, I'm just not saying anything to them. When you see momentum like this, I'm really not saying anything about it. We'll talk about that when we start going into more details as far as trading is concerned. The video is already long. I'll talk about trading the highs and lows in subsequent video. Okay, so for now, this is your first time of coming across our videos, kindly subscribe to our channel, like the video, and share it also. Thank you very much, and enjoy the rest of the day.